All right. This is Ron James, the CEO of Upscale Exchange, and I'm glad to be here with my good friend Joel as we've learned, gone through a lot of things and learning about a new product that he has. When I started in the tax credits or tax business, really, I didn't make the connections to healthcare probably until about 6 or 7 months ago, and how there are significant products out there that will help you, that you can use your tax credit savings to help get benefits for your employees. So Joel is the CEO of WellCore 360, and we're great to have him here. So Joel, if you want to kick us off and just tell us a little bit about you.
Hey, Ron. Thanks so much. Really excited to be here talking with you. Look, WellCore is a unique program, excuse me, that's been designed specifically to deliver a comprehensive set of benefits to companies' employees at a kind of a unique value proposition. And I think it's important to note that when we kind of sat down to develop this, we did it a little backwards. We stopped and started looking at kind of what are the needs? How can you help drive? How can you fill gaps that the core insurances are leaving out there? And background-wise, for me, I've been in the benefits administration, benefits technology space for over 25 years, and worked primarily with large employer bases, up to 170,000 employees for our largest group that we've had. But working through all of these, both small employer, mid-size, and large, there was always this core issue about how do I support my employees? How do I actually provide them an actual wellness track that not only will they use, but will they be able to benefit from? And do it in a way that, one, I can afford as a company, two, the employee can afford, and three, as I said, deliver real results. And that's kind of where we built the program. And Ron, I'll ask you a couple of questions. We can jump into the tax side. We can talk a little bit more about the program. Where would you like for us to go?
Yeah, let's just talk first. What's broken about how the small businesses buy health benefits today?
Oh, God, that's a great question. So really, look, our traditional view on health insurance is just that. You go to a broker, you go direct to a carrier, you put in a health plan for your employees. If you're over a certain size, 50 employees, there's a compliance measure you have to hit. Other than that, you're really trying to provide a support basis for your employees. It's a recruitment, retention tool. But in doing so, the costs today have just gotten so outrageous. And number two, in order to be able to control that, new plan designs, new models have come up in the last decade or so that have this high deductible health plan component. So you've got this huge number that you're actually putting at risk for kind of you, the employee, or me, the employee, to have to pay before I really start getting the primary benefits. And that in itself is a very kind of a risky element, because not everybody can contribute to, a health savings account or a HRA or anything like that is designed to kind of help with that. So yes, you have something there, but in the old days, you used to kind of call it, major medical. It's if something really big happens, it's going to kick in. But up until then, I've got some basic benefits. I've got my wellness, so I can go see the doctor annually. I've got some, limited use copay, but for the most things, I'm paying a deductible and a co-insurance. So there's a lot of out-of-pocket costs out there. And insurance is just that. It's in case something goes wrong. So what about leading all the way up to the point where something goes wrong? And what's the focus on that? And how can you actually make a meaningful impact on an individual, or me as an employee, on myself, that would identify something early, potentially, give me a healthier track to go on, and do it in such a way that it's not forced on you, but it's something that is a participatory base. That in itself now has a real impact. So newer health plans, newer structures, even traditional insurances, if something goes wrong. The biggest issue is kind of before that, before I know something is wrong, or maybe something is wrong in the early stages and I may not know for 3 years. So how do I really make an impact to that? And that's really where we see the difference here. And that's where we see the biggest gap in today's employee benefit world.
It makes a lot of sense. So are you able to explain the program? If I'm an owner, I have 25 employees, Obviously, we have this great time of the year that's coming up, which is open enrollment, which all of our HR benefits partners are looking. So it's a perfect time of year to have this conversation. But what actually changes if I go with a program for a company like with a program with WellCore 360?
Well, I tell you, there are a couple of things that do change. One, you are able to immediately close a lot of these gaps that we've talked about. You're able to immediately address kind of those core constraints and those core issues that your employees are coming to you. Whether your role is, as an owner of a small business or you're in HR or benefits, these are the items that people are coming to you with. Having a hard time making ends meet. Costs are rising everywhere on a daily basis, it seems like sometimes. You as an employer can't afford to raise their pay. So you as an employer can't afford to increase the benefit level or provide the support to help people cope. And as a side, you as an employer are also looking like, how do I help recruit, retain, and then make my employees more productive in a supportive way? So how it looks like is this. WellCore is not a health insurance plan. As a matter of fact, one of our requirements are to remain compliant that you actually have to offer what's called an ACA, Affordable Care Act compliant plan to your employees. That's number one. Number two, we sit alongside that. Our plan is actually a component of kind of two different things that allow us to work inside of the tax structure compliantly, as well as deliver what we need to do. It's a preventative care management plan, and it's a cafeteria plan structure. Those two things work together to form kind of the compliance base of WellCore. So what we do is this. We take a census from you, a de-identified one if you'd like. We actually run it against the program. And you start seeing now at the employee level what the difference is going to be. The way the program works is there's a premium that's paid, and in the very same paycheck, there's no front loading. In the very same paycheck, there is also a claims reward payment that is put in place. Now, that claims reward payment is based on compliant actions that you take as an employee. There's one action a month that you have to do. We have 6 of them that we pre-prescribe, and there's another 6 that you can choose from hundreds of different things. That triggers a claims reward compliant payment to you by completing those actions. And actually, we have a front-loaded one on the actions. So when you go in, you review the platform, you review the personal health dashboard, you complete some of the core just informational items, you've now taken that first compliant action. So what we're doing is there's a premium payment that comes out pre-tax, reduces your taxable income. Next, we put in an after-tax claims reward payment. So net result between both of those is your take-home pay actually goes up. We're seeing in anything from as small as, $15 to $20 a pay period to $150 plus a pay period. Typically, what you're going to see is anywhere from 1.5% to 3% increase in your take-home pay annually. And there's a lot of factors in there. But if you stop and think about this, on the upside, $300 a month is a lot to add to kind of my take-home income, especially when you're looking at gas prices increasing and you're looking at, groceries increasing. That makes a substantial impact. And even if we're looking at the other side, if we're looking at, $50, $75 a month, what we're getting feedback from our member base is that is an incredibly valuable addition. And, I know a lot of people focus on that, but that's actually something that is kind of a side benefit, because the real benefit are those things that we talked about before, those 3 pillar supports, the $50,000 life insurance policy that's there as a protection element for you if something should happen. Number 2, that access to no cost virtual primary care and urgent care, and that no cost prescription program that covers, literally 30,000 permutations of about 8,000 different drugs in the formulary. All of those things are core components of that out there, and not to mention the mental well-being aspect of the plan. So all of that's kind of out there, and we run that economic look and provide that back to an employer. And in addition to that, not only are you seeing what the employee saves, but there's the opposite, the corresponding side for what the employer saves, because reducing that taxable income for the employee also has that same benefit on the employer side. So now You're paying less in FICA. You're paying less in, other mandated, whether it's SUI, et cetera, taxes that are there. And we quantify that number for the employer. So at the end of the day, this doesn't cost the employee anything. As a matter of fact, it increases what they take on pay. It doesn't cost the employer anything. As a matter of fact, they retain more money every month because they're paying less in taxes. And number three, it's a fully managed, compliant, and easy to implement program. And the reason that it's an easy to implement program is because of the technology we have behind it. And that's kind of the big thing. We fully integrate with all major and minor payroll systems. I've got 25 years kind of behind this in doing payroll data management, which really went into the design of our systems. So we have the opportunity to truly fully automate the entire administrative process on behalf of the employer. So it doesn't cost the employee anything, doesn't cost the employer anything, and is not a drain on the employer's resources or time to set up and administer the program.
I think that's probably the big one there, as I think through it. It sounds like from the employee's perspective, it's really a video a month, which I know, I remember I used to have United Healthcare, and I had all these things that I could, programs I could do and learnings I could take, and they would load money onto a gift card for me. And I could get like $300 a year. So it sounds almost similar to some of that type of stuff. So talk to me a little bit more about, you say they have technology to do this, but and it really is no burden on the company. But does it disrupt my business at all if I'm a business owner doing this? Who's the person in the business that works directly with you, and kind of how does that technology help me that you have that maybe makes this how does it differentiate from others that are out there in the field?
Oh, excellent. So really, there's a couple of different sides of this. Number one, you're talking about from a business owner perspective. Now, obviously, as a business owner, I'm going to want to be involved in making the decision. There's an economic decision here, and there is a time constraint decision here. So both of those things are really part of this. And we work very hard to explain and not just tell, but show how this works for the company. From a economic side, whether you have a controller, a CFO, or you do the books yourselves, it's kind of black and white. Here's what the cost savings are for your employees. Here's what the cost savings are for you. That one's the really easy one. The next one is showing, okay, great. What payroll system do you utilize? And on small employers, we could be looking at Gusto, QuickBooks, you name it, all the way up to large enterprise ADP, Paychex, et cetera. We have what's called a census analytics and management tool, which basically says, okay, you tell me your payroll platform. I'll tell you the 2 pre-configured reports to run. Those 2 reports, we then get everything we need to be able to run all of the front end piece. Second, we send you a payroll file export every pay period. And what that does is it confirms and loads into your system all of the managements for the premiums and the claims reward payments. So the most time that you will have is in between the time that you put all your employees' information into your system and you actually press run on payroll, you will import one file. And if you're able to manage it, not only will you not have to import one file, larger companies, more automated set, we can actually push the file directly into the payroll system. So, but at most, you'll import one file and then you hit process payroll.
Wow. Okay. So it does sound fairly simple for me. How long does this process? Let's see, if I'm an HR manager, it's almost the end of July here now. And obviously I've got to make some decisions pretty soon about open enrollment. I guess it's a couple things. Typically in the industry, the only time you can change your insurance plan is open enrollment. Is that true for this? And then 2, what does the process look like, or how long does it take once I decide, hey, this is what I want to do for my company?
All right, great. So 2 things. Yes, this is a Section 125 plan. So it's the same thought process of what you have for your medical, right? But we do have a plan year. We as a company have made the decision that we'll support any plan year structure. So even if your health insurance plan year is January through December, there's nothing that stops us from going live in October and September, whatever the case may be. So we manage on a 12-month cycle, and we'll even do what's called a short plan year with conversion to match your big plan year if that's something that you would want done. So that's kind of off the table. You can do this anytime. A lot of time companies do say, you know what, it's open enrollment, we're going to do all this together. Interestingly, because of the financial well-being aspect of this, we see a lot of off-cycle kind of entries. So before open enrollment, actually. So people understand the impact on what their savings are as an individual, and that can help them decide what to do with that extra money going forward. Can I put that in additional money into my 401k? Can I buy maybe a supplemental policy or structure that's out there because I have a little more disposable income than I did before? Or do I just decide, you know what, everything's fine and I just want to take that extra money back in? But those are some things that we're really seeing a lot of feedback on as we've gone through this, and I actually find that very interesting, something we hadn't anticipated before. So you can go live at any point in the year, and it is a 12-month plan year that's associated with the plan itself.
All right. Now I'm going to ask you a hard one. So last night I was with some friends, and I was talking to one of those friends about cafeteria 125 plans, and he said that he has offered it to folks in his business that are there, that are in his network, and one of them did some research and found some really scathing stuff that the IRS had said about folks doing these 125 plans. So what do you know about what the IRS is warning about, and how are you doing things to be in compliant with the IRS on these 125 plans?
I am so glad you brought that up. There are, for as long as the Section 125 has been out there are people that have put together which plans that amount to really a tax dodge. So there's a couple of things that are important here. And remember when I talked about really our compliance structure is built on two separate pieces. And one of those two pieces happens to be the Section 125 plan, which enables us to do this pre-tax. But the compliant part about this, and the things that all of these other people are not looking at, haven't bothered to do because it is very costly, is actually putting in a qualified preventative care program that technically is a self-insured medical plan. The self-insured payments come from us via the group of premiums paid by the employee. So while this is no fixed insurance product, the inner workings of the plan, the compliance aspect of the plan, falls under those two primary components. So what the IRS has put out there is saying that, you can't just take money pre-tax and give it back to them post-tax. You have to provide real value. All right. The IRS isn't saying you can't do this, but the IRS is saying if you do it, you have to provide real actuarial value and real calculated value to each of them. So everything that the plan does is covered by something called a CPT, Common Procedural Taxonomy. And that's that code that your doctor, your hospital, whatever, actually bills an insurance company, right? And it tells them correspondingly, whether it's Medicare or United Healthcare or whoever it is, what was done and what gets paid. Now, we do not bill insurance companies, but we adopt that same method to actually provide a value orientation and a dollar amount to each of the actions that are there. Our program, which is built really on what's called the Predictamed infrastructure, which is a technical and compliance infrastructure that's been around for over a decade. That is actually aligned to take care of what's called the excess an excess valuation, right? So you are getting a claims reward payment every month. The compliant actions we have you do, the CPT structures they're tied to on a monthly basis, really drive that value orientation. So we can do and have provided the full actuarial support structure to show that there is no excess taxable valuation. So IRS isn't saying the plans are wrong. The IRS is saying there are people out there administering the plans incorrectly. We know we have not only from compliance reviews and everything else, but we have the entire structure. Now, I could start reeling off code bases and everything else. But one of the things that we cover with everyone that we talk with is really this big question. because there have been reports that are out there, and there are, as in any industry, unfortunately, bad actors doing things. So again, that's a conversation we love to have, because it really allows us to kind of drop in here. So remember, Section 105 is one of the sections. Section 125 is another section. There's Section 213D, all these other ones. Remember, I told you I wasn't going to talk about them. Here I am just rolling them out. But all of those work in tandem to make this a fully compliant, trackable plan and program.
Nice. Okay. It sounds like we can be confident in going with you guys to do this. So lastly here, who's a fit for this, or just as important, who's not a fit for this type of program?
Honestly, I can't see of anyone that's not a fit for the program. And I'm not just because we think great about our program. If you're an employer that offers, well, you know what? Let me back that up. If you do not offer an ACA compliant health plan to your employees, you're not a fit. That is a compliance requirement that we have. That's number one. Number two, see number one.
Okay. Perfect. So
now, who is? Truly everyone else. Where we're seeing the adoption on this are employers that want to be able to provide that additional assistance, are employers that, quite frankly, want to be able to recapture those tax savings for themselves as well.
All right. Well, that makes a lot of sense. Well, Joel, is there anything else that employers or businesses should know about WellCore 360 before we wrap this up?
The program itself is designed, as we've said, to truly support your employees. It also augments the benefits you offer. The biggest thing, one, for an employer, at no cost, you can actually have a real impact on both recruitment and retention and the lives of your employees. So whether your focal point is, looking for cost savings for the business, better supporting your employees, and really impacting those recruitment retention issues, I think really those are the things that we love to talk to people about.
All right, perfect. Well, Joel, I appreciate your time today. Thanks for jumping on. It was a great chatting with you.
Thanks, Ron. Great chatting with you as well.